Hey, good morning, traders. Peter Callis here with Market Jungle. Today is January 26th. I'm going to be doing another video trade review of my day today. I did my first one ever actually yesterday, so bear with me as I get the hang of these. I promise that they'll get better as time goes on. So today I ended the day up 350 bucks. Kind of a semi-average, a little bit below average day for me. Win rate wasn't very good. Let's see, I took 1, 2, 3, 4. I took 6 trades and only 2 of them were winners. You can see I have duplicate trades here. That's because I trade 2 separate accounts and I take the same setups in both accounts parallel to each other. One thing to notice here is I maintained a really good risk reward today. So if you look at all of my losses here, they're very consistent with how much I lost. 92, 83, 93, 80. That's because I define my risk before I get into any single trade. I know where I'm getting in, where I'm getting out, whether it's a stop loss that I'm getting out at or a target. You can see my winners were much more than this. Depending on the strategy, I either run a 1 to 2 or 1 to 3 risk reward. I also scale out in some strategies that I have and other strategies I don't, depending on which strategy I'm using. However, the thing to note here is that you need to manage risk day in and day out. Managing risk is not just across one trade. It's not just perfecting your entry. It also includes making sure you size properly. It includes making sure you manage proper risk reward day over day, week over week, month over month. And one other thing to note here too, a lot of beginning traders, if you look at all of your losses, they're all over the place. You might have one loss that's 50 bucks, you might have one that's $300. Consistency is really found in your actions. So if you're seeing inconsistent results, it means you're taking inconsistent actions. This means that you need to really focus on yourself, try to create that self-discipline to write a plan if you don't have a trading plan, follow a trading plan if you have a trading plan, evaluate how you're executing against that plan, and tracking all of this in some sort of a journal or Excel spreadsheet or some way, shape, or form. If I ask you, can you remember the last 5 trades you took? Some of you may be able to, some of you may not. If I ask you, can you remember the last 10 trades you took? Most likely no one can remember that. So journaling is key because it's a way for us to continually track our progress and go back and re-review so that we can understand where our weaknesses and strengths and what do we need to focus on to try to improve as a trader. Let's see. Let's go look at the losers first. So Uber was one of them. Setup pre-market, we had a gap up 5%, a little over 5%. I took this trade over this consolidation right here, over the highs. I got in on the first candle and I got stopped out right here. If we look at plug, this was the second trade I got stopped out of. It's kind of the similar setup here. I took it over the highs on the first candle and ended up getting stopped out. I was in the money here for a little bit, just about 1.5 risk reward. That's what this line is right here. However, I didn't lock it in because this trade setup that I was trading this morning, my trading plan does not tell me to lock in it at 1.5, so I did not. Let's go look at DraftKings. This was the third trade for the day. This one was actually really clear here. So if we look at the overall daily, you can see we've been in a downtrend for quite a while. We had this impulse move down here recently, quite a few red candles. We had a hammer candle here indicating that buying pressure was coming in with excess volume right here. We then had a doji candle. This shows that there's confusion. Buying and selling pressure is very similar. And then we gapped up over all of this morning. So this is a very, very clear setup that I took this morning on the daily chart. I executed it on the 5-minute chart. You can see that we did have that gap up right here from yesterday, which was over those resistance points on the daily. The gap up was a little over 9%, and we had a very, very clear consolidation all morning here. So I took my trade right over here, right over the consolidation at 21, which is also a whole number. There's a whole psychology behind whole numbers and day traders. Right out of the gate, my target actually on this one was 82. We got up to 81 on here, so I was 1 cent away from my target here. Unfortunately, I didn't lock it in. I should have. This is something that risk reward is dynamic and it changes as price action changes. So there is a lot more risk at this point in time to the downside than to the upside to gain 1 cent. So unfortunately, I wasn't quick enough to lock this in. So I ended up giving everything back all the way back down to break even. And then I closed the trade right here, 1 cent above the high. You can see there's still quite a bit it could have gone up, but that wasn't my trading plan. My trading plan is very mechanical. That way I can make sure I can draw insights from the statistics. So I closed my trade when my trading plan said I needed to close it. Looking at the SPY today, which is an ETF that tracks the S&P 500. Let's go look at the daily here. So on the daily here, we had a head and shoulders pattern. We also had a trend line here. We broke the neckline of the head and shoulders. We broke the trend line as well. So this was the kind of the turning point and where the impulse move started to the downside. We had our impulse move to the downside. Right here, we're finding some buying pressure coming in. I drew a technical line here because this was the high of this hammer candle. This was to help me understand, is this a retracement? Now, a lot of traders who are newer, they might consider this being a bottom, but essentially this, I wouldn't define this as a bottom, even though we're kind of moving up. We have a couple green candles here. This is just a retracement. It's just a correction. We have an impulse move and then there's a retracement. Typically, when we're looking for an actual reversal, we'll need to see some sort of confirmation. I expect this to come up maybe a little bit more. Maybe we retest this and reject it. But then I see essentially a rollover and then a retest of the lows, if not a continuation down. We need to start to kind of reduce volatility here and see a bottom put in before we can even talk about going long in the overall market. So just my thoughts here. If we look at the daily, or excuse me, if we look at the 5-minute, you can see we've been kind of very choppy this morning, just trading around that technical line here. So decent day, like I said, 350 for the day. A little bit below average, but certainly happy for a green day. And let me know if you guys have any questions or comments. Leave them in the comments below, and I'll do my best to answer any of your questions. Thank you. Have a good day.